Thursday, episode number 60, September 3, 2020. We got a child tax credit. This is episode 60 again. This is try number 2. Some reason number 1 just cut out on me. We are starting this over. This is the 39.6 Facebook Live Finance Show, the show that teaches you, high earners, how to make your money work for you so you don't have to work for your money. We talk general investing, taxes, real estate, syndications, Airbnb, and even the car you drive. We are broadcasting today live from Broken Bow, Oklahoma. It is a gorgeous day. The rain has let up, and we just finished a nice morning hike on a trail, and the kids are napping at the moment. We will see how long this lasts and if I can finish an episode. All right. If you're out there, you can hear me, you can see me, please let me know so I know the audio and video is working well. All right. So episode number 60, we got a child tax credit. How is this possible? I thought we were phased out of every single possible tax benefit there is. And frankly, I feel a little bit guilty. We were even able to qualify for this, but this is the way the tax laws are currently written. So I'm not referring to the regular child tax credit, which we've had in place for a long time. And then when the new Tax Cuts and Jobs Act tax law came into place, they increased the amount of the tax credit up to $2,000 per child, but they also got rid of the deduction per child. So they turned it into a tax credit, along with increasing the standard deduction. When the standard deduction basically doubled, a lot of people were going to get phased out of having a benefit for having their children because they're taking the standard deduction. So they converted it to a tax credit. Now, the child tax credit phases out for married people from $400,000 to $440,000 of adjusted gross income. So if you're over $440,000, you can't qualify for a child tax credit, even if you have 7 kids, and that's potentially $14,000 tax credit. Now, that's not a deduction. Remember, a credit is for $1 of credit, you get $1 back. A deduction, for every $1 deduction, you're only going to get a percentage of that back, your marginal tax rate. So like 37 cents back for every dollar. So this is a dollar for dollar deduction or money back to you, rebate. So a credit is so much more powerful, approximately 3 times more powerful than $1 of a deduction. So if you're over that phase out limit and you have a bunch of kids, then you're paying a lot of tax that you wouldn't have to pay if you had a lot less income, or just even maybe a little bit less income if you're just over the $440,000 cutoff. So we, as two physician couple, a lot of two physician couples exceed this. So you don't get to have a lot of the tax benefits that are really geared more for middle class America. So I got my draft of my personal return yesterday from our accountant. So thankfully, we actually finished our business tax return, which is due September 15. We actually finished this. I signed off on everything 2 nights ago, signed the invoice with a payment and signed off on the tax returns. So now that our business filings are finally done with 2 weeks to spare, then now we can work on the personal return. And that's all been basically done with exception of the business portion, but I haven't actually looked at it from my accountant yet. So I was peeling through the personal tax return, just going through the 1040 in the first couple of pages, and I'm like, what is this tax credit that I'm qualifying for? What credit could this possibly be? And it wasn't the foreign income tax credit. This was a different credit. So I went through the pages. I'm going to pull this up. Here it is. It's Form 2441. So I'll admit that since the new Tax Cut and Jobs Act came along and all these changes with the new schedules came out, I really am not that used to it yet. They came out last year and I kind of got a feel for it, but not like I did of the previous tax forms. Okay, but so this 2441, and maybe this is something that existed before, but we didn't have kids more than 3 years ago. So it wasn't something that I paid attention to tax-wise. And I always knew that we were going to be above the tax limits anyway, so wouldn't really matter to us. So this Form 2441 is the Child and Dependent Care Expenses form. And last year we didn't qualify for any credit here, but this year we did. And I was like, how could this be? What could possibly be different? Because our income went up from 2018 to 2019. The difference is having a second child, which I didn't think that having a second child would make any difference because we're still phased out, I thought. But this form is actually different from the child tax credit form. This is for dependent care expenses. So I know it's probably hard to see if you're looking at this on a phone, but basically this form is just a simple 2-pager. At the top of it has your name and you put your social. Then it has the places where you're paying for child care or dependent care. So for us, child care. So we have 1, the daycare that our 3-year-old went to last year. And 2, we have our au pair that we had at home as well. Now, I sent over our payments to the au pair and the account did not put it onto this form, but that would be added on to. It would be about $4,500 from last year. So we got an au pair in the middle of the year. For toddler number 1 for daycare, it was $16,500. And toddler number 2, I just assigned the au pair to her because she stayed at home with the infant. And that was $10,300 here. And that was basically the cost to get au pair care, the agency, to get the placement. And then we paid about $1,000 a month. So in total, without including the payment directly to the au pair, which we did on the books, is $26,000. Now, on the second page of this form, it asks you something else. Okay. It asks you how much money you have received in dependent care benefits. That's the top line. Now, both of my wife and I are employed and have benefits, but we just use hers for this part, the dependent care FSA, flexible spending account. The maximum last year was $5,000 per family. So we could have it either come off of her pay or my pay. It's easier just for us to do basically everything on her side, unless there's something better on mine, but she's the university employee and I'm not. So in general, her benefits options are going to be better or equivalent. So we use hers, and that's $5,000 per year into a flexible spending account, and that's pre-tax dollars. And that's the max it can be. So that $5,000 comes through all the way through the second page to the very bottom. And then it asks for a different portion. It says in line 27, enter $3,000 per child, $6,000 if you have 2 or more qualifying persons. So even if you have 10 kids, you can still only put $6,000. Okay, so in 2018, we only had 1 child. It was $3,000. And in 2019, we had our second child. Now it's $6,000. Okay, so this is where the difference is. Now that we're at $6,000, this is more than the $5,000 that we get from the FSA. So there's a delta there of $1,000. So that $1,000 carries back to the first page. And then we use some sort of a multiplier. This multiplier bottoms out at 0.2, okay, or 20%. And it goes as high as 0.35 or 35%. And it's based on your income. So the more income you have, if you're $43,000 or more in terms of income, it's 20%. If your income is $15,000 or less, it's 35%. So there's a range. So obviously we're on the high end of income. We get to take 20% of that delta. The difference between the $6,000 and the $5,000 is $1,000. Multiply that by the 20%, and that gives us a $200 tax credit for child and dependent care. Now let's pretend we did not have the FSA. It would have been $6,000 times 0.2 or $1,200 tax credit. Okay, so it would have had $1,000 more tax credit, but it's still better tax savings to take $5,000 into the FSA because $5,000 times 37% or $1,850 back in our pocket. Okay, but even if we didn't have the FSA, we would still get another $1,000. So it's an $850 spread. Now, if our income was lower than $15,000, we would be able to take $6,000 and multiply that by 0.35, and that's $2,100. Okay, and I have to go. That's the end of our show today. Our child is awake. So until tomorrow for episode 61, this is the 39.6 Basement Life Finance Show. Have a great day.